Shares down today after a deeply discounted secondary offering. Abigail Doolittle is here to talk about this. Now, it looks like a plunge, but I mean, 8% when you've run up so far is maybe not that much.
You know, that's an interesting point for sure, Bonnie, when you put that into perspective, because on the year at one point, the stock was up more than 800%.
Yeah.
But in terms, so a huge move higher. And so that is actually a piece of what's going on. But in terms of the move that we're seeing down today, that has everything to do with the discount of the secondary offering, because yesterday this was a roughly $200 stock. The offering of more than 3 million shares, closer to $160. Not so long ago, as you were just talking about, it was a $234 stock, so a 35% discount. So either way, there's more supply to the market. There's also some concern, perhaps this has to do with early venture backers who were in this offering, that are part of this offering, plus the company themselves. What do they know? Why are they getting out? Huge surprise, though. We first learned about it on Monday when they put up a better than expected quarter relative to sales and the outlook. If we go into the Bloomberg, we can actually see the surprise in the chart. Now, first of all, if we take a look at this chart, we're going to see the huge run up. Of course, the IPO in May was a $25 listing price, and then up and away at the highs, again, up more than 800%. Now, from a technical standpoint, you see this pattern of rising lows. You see equidistant highs. That tells you the bulls are very confident. So that was a bullish pattern that was set to take the stock sharply higher. It put in what's called a false initial reaction. That's basically a way of saying the market's totally surprised. Now it's breaking to the downside, and you could make the case that you could even see a bigger plunge to the bottom.
Abigail, this stock just listed. Isn't there usually a lockup or something?
Yeah, you're right about that, Guy. There usually is, after the IPO, a 6-month lockup. But in this period, they were able to get a waiver for that for this particular offering. Again, about 5% of the float, or a little more than 3 million shares. They won't be able to offer any other stocks. But again, or shares beyond that, that lockup will remain in place outside of this offering. But again, it raises the question, what do the early VC firms that were involved, or what does the company know that they are selling? Or is it just a matter of cashing out? And you could make the case, Guy, the company does stand to make $40 million from this offering. Perhaps they'll put that back toward production. So there's different ways to take a look at it. But Vonnie's first point about the stock being up so much on the year, some nerves here, some jitters, taking chips off the table.